Good morning folks, it's Mr. Intermarket Analysis, just doing a quick rundown video on the FTSE 100 for Friday 25th of October 2013. Okay, so basically just a quick summary what's happened overnight. We've had the Asian markets down quite heavily. You've had the Nikkei down, you've had the Shanghai down due to obviously liquidity concerns. Obviously with regards to that, the yen pairs are obviously under pressure. The Euro, Aussie under pressure as well overnight. Commodities obviously have been hit, gold, copper, oil. So we certainly have a bearish scenario at present. Although the Yanks want to keep short squeezing and manipulating the stock markets higher, so slight problem there, and there's a divergence. So we have the Shanghai, which I explained in my S&P video yesterday. The argument was that the Shanghai has broken south, broken its bullish channel. Therefore, all global markets will eventually break their bullish channel as well. So obviously that's the same from the video last night on the S&P 500. Therefore, that's a thesis that the Shanghai has broken the bullish channel, putting a double top. Therefore, global markets will break the channel and put in a double top as well. So if you use the same sort of theory based on intermarket analysis and we apply that to the FTSE 100, we can clearly see the FTSE on the daily chart has been romping higher. We are into resistance here on the FTSE 100 around the 6,700 level, unable to penetrate higher, along with the FTSE 250 as well, which again I'll bring up a chart. You've got a clear a resistance trend line there that we've failed to penetrate. Therefore, I do expect a sell-off and a reverse in the opposite direction. Now we are awaiting GDP data today out of the UK. That should be quite interesting. Okay, see if retail sales have picked up, etc., etc. But based on the theory of intermarket analysis, it is forecasting a sell-off. Now let's just have a look at the 10-minute chart, or let's go to a 60-minute chart, should I say. Obviously we've had this bullish trend line here, we've broken it southwards, okay, and we are testing a double top resistance at the moment. A double top resistance being 6,720, 6,700. You have an unfilled gap below, which is around a 6,570 level, 6,580 level, which from my perspective needs to be tagged on the downside. You've got horizontal support. Well, the first line of support will be around the 6,660 level, so keep an eye out for that. Okay, when the meltdown does occur. Okay, so keep an eye on that level there. So let's have a quick look at a 10-minute chart. Okay, before I wrap up this video, 10-minute chart at the moment. Yeah, as a as a rising wedge pattern. Okay, so we've got a rising contracting wedge. We've broken out south. We had a bull flag formation which we failed to penetrate. You have a H&S formation brewing right now. Your H&S neckline is 6,700. Your head is 6,720. So you're looking minimum 6,7. Let's have a look at the neckline here. 6,700, 6,720. Looking at 6,680 minimum, but you have the first gap here around 6,675. So it makes sense. So the 6,700 is the actual H&S target, but we should hit the 6,675, 6,680 level on the downside. But once we close this gap below here, okay. So keep an eye on that formation there. Again, it's supported by the S&P 500. Please look at the previous video, which I claim, where I state that there's a H&S formation brewing. Okay, I can look at the Nasdaq as well and explain that to you. But obviously the Nasdaq gapped up overnight based on Microsoft earnings, and we had a short squeeze again, which the Yanks love, unfortunately, due to the Kool-Aid that's been given to them. So anyway, juiced up markets, we all know they're all rigged. Let's see what happens today. Obviously, always remember, risk on, risk off, wax on, wax off. Goodbye now.